Okay, let's have a quick update. I'm going to start off with the DXY. I'm going to be covering commodities in this video. So the dollar, during the week, it looked like it might break out. We had this move up here, but then look at this close. Low of day close. So since then, we've just drifted lower. So you'd expect that to have helped commodities. Now it helped, one or two arguably, but not so much gold. Still, gold has not really flushed too much, and it's actually almost had a healthy retracement of 2000. We're going to look at gold in a second, but the DXY is really stuck between this range here, 107 on the upside and really 105.5 on the downside. Very rough stuff. I don't want to get too precise. It's all about the close above, 107. If you close above 107, okay, we had it here, but another close above 107 should really move us higher to 108, really. And a close below 105.5, in my opinion, would move us down to 104.5. And I thought we've been destined for 104.5 for some time. And remember, the Japanese yen is very important at the moment. I don't want to make this a currency video, but look where the US dollar Japanese yen chart's gone all the way up to the absolute peak level that I put in at 151, 152, really. And the Bank of Japan is in trouble. But anyway, I think the Bank of Japan will have an effect on the DXY. It already has. Let's see what happens there because there's absolute turmoil. But the DXY, those are the ranges I'm watching. Now let's look at commodities. So starting off with copper. To be honest, copper, yes, it's broken out as I thought it might. But if you remember, copper really moves very much in line with the markets. And the markets have gone up a lot more than I thought they would. I thought this would be a small bounce and back down again. It's a big bounce. I still think we're going to go back down, but yeah, I would have expected copper to be much higher, given that the dollar's really gone sideways. In fact, even down overall. And the coppers have gone up. That those two combined should send copper higher. And copper was really holding this zone very strong. It was outperforming. Whilst the market was going down, it was holding it. Whilst the dollar wasn't going down, it was holding it. And now the two elements are helping it. It's only gone down, in my opinion, it's only gone up very little. So I would have expected more. I do still think we continue this breakout. I just don't know how high. I mean, obviously, copper long term, fantastic thesis, but I would have thought that we'd start aiming for up here, but that's quite a big move to ask, considering the markets will probably start rolling over now because they've moved up a lot. So copper has gone up, but it's a little too late. Okay, natural gas, that on the other hand, healthy retracement. Okay, it's nice that it curled here. I thought it might go down to 3 and curl, but whatever. Very little difference. Went all the way up. This big rejection candle, this big red rejection candle, basically the worst case kind of scenario candle, massive close at low of day. Just to be honest, it recovered very quickly. There was one more drop. That's inevitable following this candle. But look at this reaction here. Natural gas just has a way of playing with everyone. The widowmaker they call it. But look, since this close up here for me said, okay, we're going to fall. And then again, we retraced back down to sort of breakout zone. And now we're back here. I still think we're going up to 4. All right. It's playing with everyone, but basically you zoom out. Obviously, if you really zoom out, it's very bullish and it's, favors the move upside. I think we're going to 4. I think we might even start that move today. Looks good so far. The day is very young, but a move to 4 and possibly a gap fill. I think that's when people start to rush into it after it's already moved quite a bit. But still, natural gas bullish on its way to 4, in my opinion. Thesis remains unchanged for some time. Now, oil seems, okay, well, I don't know where to start, but we moved all the way up here, big drop. And then as this started to move back up, it started to retrace on days where the dollar was down, when the markets were not down. It was just sort of, it was underperforming relative to its peers, let's say, or relative to the sectors that usually help it. So it was weak. It's come back down. It needed to come back down, find support. Where's it going to find support? Is it going to be 79? Is it going to be 82? It's been 82. And now we seem to be finding a bit of a footing here. It just still needs a bit of time. You're not really allowed to go up straight away. A couple of trading days, maybe. It is oil. It moves quickly on geopolitics too. So it's not going to be very slow. But I just feel like it needs a couple of days just to confirm that it's holding this sort of low AET zone, 81, 82 preferably, and then move back up and challenge basically 91. And by the time it challenges 91, it might take a couple of trading days. It might start to interact again with this descending. So I'm looking for a move basically here. and then we'll see what happens, and then sort of a drop and then a breakout. But that kind of a move, I don't know how many days it will take, and maybe we go down, up, okay, it won't take that long, but you know what I mean? It might just not go up in one line, but oil looks like it's found a bit of support. Let's see if it starts to drop, then it will just drop down to 79, and then maybe we'll try. Yeah, those are the two scenarios for me: up straight away to 91, or down to 79, and then up. Well, it wouldn't be 91, but up to maybe 90. But this descending line, this big long descending line, should act as a nice confirmation of breakout once it closes outside of it. Okay, uranium. I don't want to cover uranium. I made these little lines because I want to put things in context when you zoom out. I'll get there in a second. Uranium is amazing. Uranium was holding its own, going down a little bit whilst the market was really flushing. It was outperforming the markets. It does follow the markets. And the markets have gone up and uranium's gone up. Now, uranium hasn't maybe outperformed the markets on the way up, but it's just constantly overall outperforming. So green again, you can see where it's going. It's going to test 28.5. This is just what the pattern suggested. Once we close above 20.5, we start to go for 31.5. It might even happen quickly because remember how quick this breakout happened. Once we touch this, we're probably not going to keep going. We'll probably come back down again, test 28.5, and then go back up for higher. Where is higher? Well, it's all the way up here. Now, ETFs cannot be trusted too much, the way they're created, the dilution involved, but this still suggests uranium has a long way up to go. So, and that's why I drew these lines. Like for people like me who have not entered uranium, who are just regretting it and just watching jealously as everyone makes great money whilst everything else crumbles around them, I don't like to chase. I would never buy this, but whether you buy here or whether you buy here where it is now, or whether you buy on a big drop, a mediocre drop down to support here, it's the same thing. It's the same zone. Now, if you have a massive market crash, you'll probably end up getting uranium down here, which is still on support. I extend this line. That will still be support. And even if it drops support, it'll end up going up with everything else when everything resumes its uptrend. But uranium will outperform. There's a reason it's going up. It's because everyone's adopting uranium. It's the only energy source long-term that's viable, renewable, or whatever. Fits all those green, sustainable label words. The point is, when you zoom out, what's the difference between there and there? Very little. There's probably 10, 15, 20, even 30%. But overall, in the grand scheme of things, if you're holding it for 1, 2, 3 years and it ends up going all the way up to 100 plus, it's absolutely very little difference between 28 and 20. There is a bit, but so that's why I drew those circles. The point is, uranium looks extremely strong, short term, medium term, long term. It's just amazing. The only thing that can interrupt this is a market crash. I don't think the dollar can. I don't think interest rates can. A war could. And to be honest, a nuclear reactor meltdown definitely would, Fukushima style. But besides those low probabilities, uranium looks absolutely amazing. And I'll leave it there. It's very painful to watch, but well done everyone holding that. Okay, gold. Now gold, to be honest, is still hovering pretty much near 2000. Yes, we closed above 2000. We retraced a little bit, but we're still holding, right? You can see it's stuck between 1970 and basically now 2010. Those are mini support zones. For me, once we start moving back up above 2000, I'll go straight to 2010. 2010 is not really a level. It's like an intraday level. Now it is because that's where we closed on that Friday. But for me, it was 2020. But to be honest, once you close above 2010, it's probably going to go a little higher than $10. So really, there's only one resistance is 2050. Let's get there when we get there. For now, we need to close above 2010. But we're holding around 1990. Any decent news will go straight back up there. So it's not over for gold. On the way down, for me, it's 1950. If we flush more, it's the descending retest. Wherever that would be, let's be honest, it will pretty much coincide with 1900 at the moment. So if you lose 1950, you go to 1900. That's my take. So it's massive ranges right now. It sounds massive. It sounds massive. I don't know what I just did there. But, given where we are in price terms, it's not the biggest. Let me just extend this to make the point a bit more. So those are the levels on the way up, on the way down. Obviously, you would have expected gold to be a bit higher, maybe even yesterday with the dollar dropping. It is underperforming a little bit, but it's still overall holding its own. Remember, it's come from a huge move up, and it's actually holding that. So normally after war moves, and I think a lot of it is war move related, they usually come back down again. So you got to watch out. And that's the thing. Because silver is underperforming. Again, look at this today. Whilst gold is unchanged, silver again red. Silver is underperforming. And think about if gold starts to drop to 1950, 1900, where does silver go? You know, you're going to see moves like this might be 1950, you know, a move because you've seen silver just flush randomly. So these are the levels. I've actually added this ascending because it's, you know, look how many pivot times it hits. 1, 2, 3. Okay, we knew that before the flush. But even when we return back up, 4, 5, it seems to be holding. So I think we have good support here-ish, 22.4. But again, if gold starts to flush to 1950, silver's not going to hold this. We've seen how silver acts when it's forced to go down. It just absolutely cascades. So maybe this is 1950, 21.8. And if gold keeps going, let's say 1900, do we go down to 20.8, sorry. You know, what about if we go all the way down in gold, you know? What if we go all the way down? Now that will take some doing. That'll be like a peace treaty and the dollar climbing and maybe the market's going up. I don't even know, maybe even down. We'd have to see. But that's the scenario where silver starts to flush all the way back down to its lows here. Now, it's got very strong support here, and it's got support below, you know, but still we'd be breaching long-term trend lines. You don't really want to do that. So those are the trend lines I got on the way down. On the way up, there's just one, 23.6. The way it's been acting, it would probably take gold being at above 2020 or something, at least 2010 to be up here. But silver is underperforming, unfortunately. But you never know, it can turn and then just quickly shoot up too, just as it can cascade down. But those are the levels I'm watching on silver. Let's finish off with the miners. Miners, to be honest, just holding this move up. This underperformed the metals on the move up, but still they're holding. And now the markets have moved up tremendously and it's not really participating. So is that good? Does that mean if the markets go down, all of a sudden the miners go up? That's risky. It does happen. It's very rare for sectors to do that, but gold can do that, has done that, has done it recently. What you would really need is a move back up, basically a close above 35 for me. GDXJ a close above 35. Then you've really cleared all these prior candles. You're definitely closing above the descending, and then you can really shoot up. Otherwise, a move above 34. Yeah, no, 35. 35 really needs to do it. On the way down, they can go lower, of course. I don't know, does it go down if the markets go lower? That would be horrible because we didn't go up with the markets, but we go down the markets. I think we're really following gold more than anything, more than silver. So for me, just watch gold. But yeah, the miners have just gone sideways, whilst the last couple of trading days, the markets have gone up a lot. If we look at GDX, it's the same sort of thing, kind of outperforming here, though. On the way down, one thing I've noticed is it's touching the descending. It's finding support on this descending line. Look how many times. 1, 2, 3, 4. This one almost 5. It's like 5 out of 5. So it is finding support there. Next support is here. I've put all the support lines in, nothing to change. I think they're correct. And on the way up, very clearly 30. Big round number, clear resistance many times often over a decent time period. So that's what you need to close above 30 on GDX, and then you can shoot up. What will it take? It will probably take gold. Unfortunately, the mining investors don't believe it, but it's an advantage for those that are into the long term position creation. It will take gold closing above 2000 and just continuing that move the next week and basically testing 2050. That's when you probably get silver just starting to finally wake up. And then you might get the miners do something magnificent that we haven't seen in some time, no matter what the markets are doing. And then who knows, maybe everyone starts to finally pay attention to the sector with gold above 2000 and making new highs and the miners going up whilst everything else is going down. I'm not going to cover the markets here. I'll do that in another video, but I hope that was decent coverage for the commodity and the gold and silver miners. Good luck today, NFT, right? On-farm payrolls, NFP. There's news every day, but it's a big one.